Hello, everybody. I'm your host, Eric Bird, here at StopStrugglingNow.com. I'm in Florida, protecting myself because some of these clowns in America think it's okay to go hang out in bars, beaches, restaurants, and even fitness centers. So again, that's not me. I came to cancel my membership. I'm not going to a fitness center anytime soon. That's going to be visited by hundreds or thousands of people. So today, we're going to talk about the 203k loan. That's right, it's an FHA loan. We were doing a live. A subscriber, a member, a person watching the live stream asked about a 203k loan. I've never done a 203k loan, but I'm going to get into it after this. I'm going to go over what the parameters are in case you want to take advantage of a 203k loan. But as you can see in the background, we have devastation. We have businesses who have closed up shop. This is all over America. This just means you need to get your streams of income. This means you need to get your credit right. This means you need to get a lot of things right now in the next 6 months because nobody's coming to save you. And welcome to Fha Optics. Check. Stop struggling now. Gear. Check. And please like, subscribe, and click the bell below so you get the latest updates. Now, let's get to it. All right, welcome back. We're talking about FHA 203k loan. And for everybody, I'm just going to go over this short and sweet, but as you can see, we're on the Stop Struggling Now YouTube channel page. And again, I want to thank everybody for your likes, your love, your subscriptions, your comments, and the videos. I appreciate receiving emails. Anything that I can do to help is a pleasure by me. I thank you for your support and thank you for being here. And over here on the right-hand side, we are lucky enough to have a join button. And that's a membership button, so only members get specific, what shall I say, videos. Sometimes on the community tab here, you get different community messages through the YouTube channel. And I do videos, messages, and I also talk about creating wealth and some other things that I don't really get into on like the channel or the videos. They just get a little extra side piece of some information. So anyhow, without further ado, this is all going to be at a certain website when we're talking about this 203k that anybody can come to find out about. And right now I'm on FHAlenders.com. Everybody who's on podcasts. So FHA, F as in Frank, H as in Happy, A as in Apple, lenders.com. You can go there and find out about FHA loans, 203k loans. And again, somebody during our live who was watching our live about a week or two ago, they asked about if I know anything about a 203k loan. I did not. I do not know anything about a 203k loan. I know about an FHA loan and the requirements, and a 203k loan I did not know. And in a short, shall I say, short language about 203k. So you can buy a home, and if it needs fixing up, a 203k loan allows you to wrap the fix-up cost, the rehab cost, into the loan. Now they do have limits, so you can't get out of pocket and get crazy. So most of the information that I was able to find, it appeared that you can only do 35k as the rehab amount, but I couldn't tell if that was single family or multifamily. But we'll get into it because it doesn't really matter at this point, because when you try to apply for an FHA 203k loan, the lender will tell you if the home is eligible or not. So I'm going to get into how you're eligible to begin with, because it's the same as an FHA loan. The basics.
When you get an FHA loan, you have to live in the property for 1 year. So even if you get a single family home, a duplex, a triplex, or a fourplex, because that's all you can do. You cannot go past 5 units or 4 units. You can't go past 4 units for this FHA 203k if you want to go with multifamily. Now, just keep all that in mind. The rules are the same with credit, however. So I just Googled it, and as you can see here, from what I've been able to ascertain, it's 620 to 640 is the lowest that you're going to be able to get. That's your credit score. It has to be 620 through 640. And right now, with the pandemic and everything else going on, I'd be willing to bet 640 is what you're going to need or higher to qualify for a 203k loan. So that's what you need to know. And I will say one other thing. It's an FHA loan. FHA is a government loan. So if you owe any government agency money, such as you have school loans that are backed by the government and you have not paid them, or you are in arrears, you cannot get an FHA loan. You have to call them and make 3 or 4 payments, so then it would show that you are current. Now you can get an FHA loan. All right? Those are the kind of things that you have to watch out for. There may be some other disqualifying type of things, but anything that if you owe the government for something, then you may not qualify for an FHA loan. It's that simple. But for most people, 640 is attainable. And also, you're going to have to worry about your debt to income ratio. It can only be 40. They do say it can be up to 45%, but that includes your payment. So let's get it straight. Let's just say you make, I try to make this easy, but most people don't make $10,000 a month. But I'll use $10,000 as an example because then everybody can break it down percentage-wise. Let's say you make $10,000 per month and you have a car note for $500. All your credit card bills come up to another $500, so that's $1,000. That's only 10%. Let's say you have, with your payment for this house or apartment or duplex or triplex or fourplex, let's just say what you're going to borrow is you found something for $400,000 and your FHA note, I don't know, we'll call it 5%. So we'll be at $2,500, let's say. So now we're at $2,500 plus the $1,000. So now we're at $3,500. So you would see if we make $10,000 a month, 35% is $3,500 after the bills, after they included our mortgage and everything. So therefore, we're within the 40 to 45%. We're under that. So we're good. Now, if you only made $5,000 a month, and now including the mortgage, the FHA loan, the 203k loan, you're going to be paying $3,500 in total. Now you can see you are over the 40-45% debt to income ratio, so you would not qualify. So how much you make does matter, and it has to be verified, just like a normal FHA loan. And like I said, the key is you always have to live in one of the units for a year. All right, down payment 3.5%, standard issue. Okay, that's always going to be, and I always say it's 4% because there's always these little extra fees here, fees there, assessments. There's always something extra. So I always say just count on 4%. If you don't have to, that's fine. So as you can see now, I'm at the HUD.gov website where they're talking about the rehab mortgage insurance, and basically they're giving you the purpose of the 203k loan. 203k loan is because people can put down 4%. You can get a 1 unit to 4 unit place, and basically you can borrow money that includes the rehab money, the rehab amount in your loan. Now, I'll get into some of the things that you're going to have to do. Of course, you know it's with the government, and you know they're just not going to say, here's this extra money, and go on about your business. There's going to be some rules involved. It's government. All right? So let's talk about some of these rules. Now, maximum loan amount, as you can see here in yellow. You can borrow up to 110% of the property's proposed future value, or the home price plus repair costs, whichever is less. But note that your total purchase price plus repair costs must still fall within FHA loan limits for the area. And again, with an FHA loan, there are areas. So for instance, I'll give you a simple example. If you live in Louisiana, Alabama, Tennessee, Mississippi, for instance, home prices are less. So therefore the FHA limit is going to be lower. Now, if you live in, let's say, New York City, California, Las Vegas, Phoenix, now the FHA limit is going to be higher because the home prices are higher, the multifamily property prices are higher, and we'll get into that and I'll show you what they are. But that's the other thing that you have to understand. So if you live in the South, almost basically anywhere but like Miami or some place of Atlanta or some in the large cities, Orlando, Jacksonville, Tampa. I'm trying to think of other large cities in like Georgia, Florida area. You may not qualify, but the limits are so kind of high, actually, in my opinion, that you should be able to find yourself a multifamily property and you can actually have revenues coming in and you turn this into real estate business. And here we go with the limits. So here the standard 2020 FHA loan limits, as you can see, 4-unit home, 3-unit, 1-unit. You can see right here, $638,000 is the standard. So can you find a fourplex for $638,000 or less? Yes, you can. Hello, Ohio. Hello, Indiana. You know, come on. There's a lot of places, and plus those places that I mentioned already. Can I find one in Cali? Highly unlikely. Now, one in Cali that needs fix-up? Likely, except there's a difference. When I live in Cali, I'm going to have a higher limit. So as you can see here, the mid-range stays the same, but high limits, 638. And here we go, the exceptions. So at special exceptions, see, high-cost areas include Washington, D.C., as well as San Jose, California, entire New York City metro. And high-cost areas, medium home prices multiplied by 1.15%. So you can see right there, the 638, add in 1.15%. And with some sort of exceptions, you can see you can get up to 2 million. But there's 2 million special exceptions, parts of Hawaii, Alaska, Guam, U.S. Virgin Islands. Okay? So you got to keep in mind, this is the kind of thing that you're dealing with. So you could get close to $700,000. Obviously, in Cali, you might be able to get something in the higher end range, $600,000, $700,000. In fact, there's FHA 203ks that sometimes can get you out to over $1 million, depending on what county you live in. The county matters. Zip code matters in this case. And like I always said, with real estate, it's location, location, location. And I'll tell you one other thing. If you're going to buy a property and it has a higher value, and let's call it I'll grade it on a scale, A, B, C, D area, right? So let's just say in parts of Detroit where you don't even want to walk down the street in the daytime, that would be like a D area. You wouldn't want to buy a home there, a fourplex there, and try and rent it out because you know, one, the rents are going to be real low. Two, your property may be damaged or some other bad things. Tenants may not be safe. There's a bunch of reasons. Or you can spend more money and get yourself in like a B or a C area, that's a little B area that's safe. You know, people are stable. You don't have to worry about your safety. Don't have to worry about your property getting vandalized, these kind of things. So sometimes it's worth it, and you can get higher rents. So these are the kind of things you have to think about when you're doing your FHA 203k loans, just like a normal real estate deal as far as I'm concerned. And I'm going to move along because you know how these videos get. They get long. Now, with a 203k loan, you know you get that rehab money included with it. Certain instances, it's $35,000 rehab money, but that's single family homes. I don't know how much more you get for when you do multifamily. But here's the repairs, and I'll have a link down below to these FHA lenders so you guys can see it yourself. And I'll have it for the FHAlenders.com/FHA-203k-loan. And you can go there and read all the requirements and everything you need to understand before you embark upon this journey. Because there's only certain repairs that are going to fall under the rehab loan. And therefore, that's what you have to be doing so you qualify for the loan. So you can see down here at the very bottom, converting a one family to a 2, 3, or 4 unit property is allowed. Repairing, installing new porch, for instance, allowed. Repairing, removing in-ground swimming pool, but not installing a new one. So you can't put a new pool in, but if there's one there existing already, you can use the funds for repairing and removing. And don't think that this extra money you just get a pass on. Nah. Doesn't work like that. What's going to happen is you have to have contractors in place. And sometimes FHA approved, sometimes just state approved with a license, insurance, legitimate contractor in place. And you're going to need bids because everything's going to be inspected before they give you the draw for the money. Just like a normal construction scenario, they're just going to say, okay, you finished the pool repair. Inspector comes out. He signs off. Okay, here's your $5,000. That's how it works. So therefore, this is not a quick rehab situation because everything has to be approved by the licensed, bonded contractor. Okay? You can't use your cousin. You can't use nobody else. So, and even using yourself may be sketchy sometimes because now they're thinking you're trying to take advantage of them. And, you know, just like a contractor would, charging more, saying the bid is more when it's not. So therefore, they kind of like really wish you had a third party. And that's where your other task comes in. You're going to have to find a third party. But I'll go over the repairs real quick. Landscaping, replacing the floors. You can all find this. Like I said, I'll have a link down below. Replacing the roofing, the sliding, the gutters, the downspouts, all these kind of things. So these are the kind of situations that you got to deal with here. Now, documentation, as you can see, just go to the link down below and I'll have that for you. And it's easy. So with all that said, ladies and gentlemen, thank you for watching. Thank you for listening. And please like, subscribe, and click the bell below so you get the latest updates. And I know it's hard out there. So all I can tell you is you need extra streams of income. And keep your head up. Keep moving. And I'm out.